Today, I'm going over non-qualified mortgage loans, non-QM loans, and these are great alternatives for individuals who aren't qualifying for conventional or FHA government loans. So, my name is Duane Vizinau. I am a wholesale national lender and a certified government underwriter. So, let's go ahead and get into it. What are non-QM loans? Non-QM loans are loans that don't meet standard agency guidelines set by Fannie Mae and Freddie Mac. They also are allowing for alternative income documentation. So I'm going to show you all of the different types of non-QM loans and what type of documentation you can provide. And now these are designed for borrowers with unique financial profiles, not your typical W-2 hourly wage earner. This does not really fit within that category, although there are some programs that will still use that income, but this is for alternative unique financial profiles. Benefits of non-QM loans. So no tax returns or W-2s required in most cases, in many cases. So not having to provide tax returns and W-2s simplifies the process for some of these individuals. And they use cash flow, assets, or bank statements to qualify rather than your income documentation. Types of non-QM loans. So we have the bank statement loan, which is great alternative. And again, I'm going to go over each one of these in detail. Then the next one we have is the DSCR loan, the debt service coverage ratio loan, which is great for purchasing investment properties. Then we have the profit and loss, the P&L loan, which if you are self-employed, you should be familiar with the P&L loan. And then the next one we have is the asset-based loan, which is pretty much using your assets to qualify rather than income. The bank statement loan is perfect for self-employed borrowers, those who write off so much on their taxes that they don't show enough income. So the way this is used is 12 to 24 months of your bank statements, and this is personal or business accounts that you can use here. And the income is averaged from the deposits. Now, not every single deposit is used. That's going to be calculated and reviewed by the lender, but I can also assist if you do have some bank statements and you like to see what your income would look like. But essentially, your deposits are averaged over the 12 to 24 month period. Now, what's great about this is there are no tax returns needed. So you're not providing tax returns, you're providing bank statements, and you can use multiple accounts too. DSCR or debt service coverage ratio loan. So this loan is perfect for real estate investors, those trying to purchase a rental property without using your personal income. Now, this is going to be based on the rental income, not your income to qualify. And the ratio or the calculation formula used is the gross rent divided by the principal, interest, taxes, insurance, and homeowners association dues. So that's how you're going to determine whether you can get pre-approved for this debt service coverage ratio loan. They typically want to see it matching whatever the rent is, the mortgage payment is not exceeding. And on this program, no job or income documentation is required, just the rent from the property. And this is ideal for individuals with LLCs, investment properties. You can actually purchase in the name of an LLC when you use these type of loans. Before we move forward, if you are seeking to get pre-approved on a non-QM loan, as a wholesale lender, I offer every single program that I'm discussing in this video. And hey, they're great for individuals out there who think maybe I can't get pre-approved because I do write off so much, and you may not even know about these programs. So you can also scan that barcode for the Zoom consultation, and we can discuss your situation to see which programs fit for you that are non-QM. So I'd love to help. Go ahead and scan or visit my website, and I'd love to assist. The next one we have is the profit and loss loan. So here we have, again, ideal for self-employed borrowers. You can see the theme here, non-QM, self-employed. They kind of go hand in hand, right? So these must be prepared by a CPA. You cannot self-prepare. And on this program, no tax returns are needed. And now these are great for seasonal or irregular income earners. You may have to show proof of income with a bank statement for the most recent 3 months. So just be prepared to provide your bank statement if you are doing a P&L loan. Asset-based loans. So this loan is perfect for high net worth borrowers with low reportable income. So somebody who's got like Social Security income, pension, but not enough to get pre-approved because of their debt to income ratio, but you have millions in the bank. This is perfect for you. So this uses your liquid assets as qualifying income. Just like the other ones, there's no employment or income documentation required. So you're just going to provide your liquid assets essentially. And these must cover the loan term, or some lenders have like a 7 year or even 3 years that it must extend through. So depending on the lending institution, and as a wholesale lender, I do have many options that we can look into, but you must show that the income is going to continue, or you have enough assets to continue making that mortgage payment. Other non-QM loan options out there. So we have the 1099, and this is for independent contractors. Rather than providing your tax returns, you provide the 1099. The next one is the foreign national loans for international buyers and investors that don't reside in the U.S. You can use this loan as well. Then you have the credit event loan, and this is great for individuals who have a recent bankruptcy or foreclosure, short sale, and conventional and FHA have more strict guidelines. So this program is available for you as well. So who is ideal for a non-QM loan? Well, entrepreneurs and self-employed professionals, and then also real estate investors with multiple properties. If you own 100 properties and all of the tax returns that you have to provide showing the rental income, but you want to buy another investment property, then that DSCR loan is perfect for you. And then also we have retirees with significant assets. So if you just aren't earning the income you used to, but you have a ton of assets, then these loan programs are great. Now, there are things to consider when you're looking at non-QM loans. So the rates are typically higher than conventional, 100%. You're looking at an alternative method, be prepared to have a higher rate. Also, you may need to put more money down and have liquid reserves. Alternative loan, more money down, higher rate. Flexible guidelines, but documentation must still be clean and complete. So you still have to have the 1099. You still have to have the P&L. You still have to have the bank statement. So there's still documentation you must provide to meet the lender's guidelines. So it's just not as easy as, hey, this is my deposit, average it out. It is scrutinized like any other program out there. There you have it, non-QM loans, great alternatives for individuals out there. These are programs that people don't really know about because a lot of lenders don't market them. You don't see Rocket Mortgage or Bank of America or any other lending institution really marketing these kind of loans out there. So unless you watch videos like this or you know a lender, you would not even know that these options are available. But if you're out there watching and you are interested and you feel like you may fall within one of these categories, and again, it doesn't hurt you at all to try and get pre-approved. The worst that we can say is no today, but yes tomorrow. So I'd love for you to reach out to me. You can see that barcode as well as my website, and the link is in my bio. Please like and subscribe, and thank you so much for watching my video.